In this video, I will talk about how some new announcements from Joe Biden have impacted oil prices, stocks, and more. The USA stocks traded higher on Thursday after reversing losses. Investors sought refuge in large-cap American technology companies as the fall in oil prices helped ease concerns that Russia's invasion of Ukraine would lead to an immediate increase in inflation. After teetering at the correction edge, the S&P 500 gained 1.5%, while the Nasdaq 100 gained 3.4%. The Dow Jones Industrial Average was 0.3% lower after hovering just above a correction due to the Russian conflict. Stoxx Europe 600 dropped 3.3%, while Russian shares fell the most in recorded history. Russian President Vladimir Putin stated that Russia does not intend to occupy its neighbor. However, the action was required after the USA and its allies crossed Russia's red line by expanding NATO. President Joe Biden issued additional sanctions on Thursday and stated that the U.S. would release strategic oil as circumstances warrant. Ryan Detrick, LPL Financial Chief Market Strategist, stated that Russia's invasion of Ukraine had made the year tenser. Investors are selling first and then asking questions later. It is important to remember that major geopolitical events in the past were often short-term market issues, even if the economy was stable. West Texas Intermediate crude oil prices went down after they rose earlier. They rose by 9% to 11%. The 10-year Treasury yield went down to 1.96%. Gold reversed its gains and became worth less than it was before. The dollar and the yen became stronger, while the euro and other commodity-linked currencies became weaker. As Russia is still a major commodity exporter and Russia continues to be a powerhouse in the world's commodities market, this conflict could disrupt global food and raw material prices. The session began earlier, with natural gas rising by 62% in Europe, while metals grew, increasing inflationary pressures. Central banks around the globe have made a concerted effort to reduce inflation without significant disruption or the possibility of monetary policy errors, Keith Buchanan, portfolio manager at Globalt Investments, said. If inflation pressures are increasing at the exact moment that growth prospects are decreasing, it's certainly concerning. Ben Laidler, the global market strategist at eToro, said this is a triple hit for the worldwide economy. It has a toxic combination, Ben Laidler stated: higher inflation, lower economic growth, and greater uncertainty. The only bright side is that growth is strong and buffer against any slowdown. Policymakers and investors have already been prepared for high inflation. Investors are concerned that Fed tightening could halt growth in the world's biggest economy. Loretta Mester, Cleveland Fed president, stated that the USA rate hike in March is still appropriate, barring any unexpected turns. Raphael Bostic, Atlanta Fed president, said that he's open for 4 or more rate increases depending on the data. The Fed's expectation of 6 quarter-point increases this year is consistent with pricing before the attacks on Ukraine.